Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu, 5 o'clock in New York City. Last day of the month, July 31st, Tuesday 2012, and this is the daily report for gold and silver. We do have the market softer today, with gold currently trading down about $7.40. As you can see, current print on the screen, 1614.34. The low has been 1610.10 and the high 1629.40. Silver also trading lower this morning. Low 27.83, high 28.50, and as you can see, current is 27.96, putting it down about 18 cents on the day. You know the old adage, buy on rumor, sell on fact. Well, last week, there is no doubt, they were buying on the rumor, and the rumor was that we would probably see some sort of quantitative easing announcement, some sort of change in our monetary policy by the Federal Reserve. FOMC meeting kicked off today, goes on until Wednesday tomorrow. But I can't speak of that because I have no knowledge, none of us do. But what I do see on a technical basis, I think is pretty clear cut. When we take a look at this particular top, the resistance area that we've identified at about 1630 to 1635, I'm going to draw the arrow here, there can be no doubt that we had resistance back here. We had it become resistance here. And lo and behold, at least for now, on a tentative basis, as I usually say, we have had highs approaching this area. But as you can see quite clearly, it has not been able to take that price point out and have that become any kind of support. As we draw that along, you can see very easily that there is real resistance there, and we've not taken out this resistance area right in here. What is my recommendation because of that? With the uncertainty of what might transpire in the FOMC meeting, I have released a special notification to really trail our stops up tighter. And what I'm trying to do is we're in the market well below $1,600 in gold. Market's well over $1,600 right now. It's touched 16, as I said, 1630, but it doesn't have the ability, at least right now, to break through that. So we're going to want to raise our stops up really, really tight, just to right around the $1,600 level. Why? Because my sense is if the markets come down tomorrow, I want to be able to pull out with some profits rather than watching it erode. If the market shoots off and takes higher, hopefully our stop will hold. I would much rather, when placed against the options of getting stopped out early in a profit and having the market run away and move to the upside, we can always re-enter. Re-entering with a profit is always the way to go, I believe, because given the other choice, we're working out of the guidelines or the framework of having a loss, and that's never as easy to work with. You know, traders, we talked about different critical areas that we've identified through the use of technical analysis. Of course, we talked about this is 1637 right in here. It is a key area, and it is based upon a Fibonacci retracement, which begins really in 2008, carries us all the way up to the record top. And as you can see, that's a 23% retracement area. That area has proved, at least for the time being, as you can see on the last chart we looked at, as well as this chart, to provide some real resistance right in this area. There can be no doubt there's some really strong resistance there. My sentiment is I had hoped what we would see. I had hoped what we would see is as follows. I was looking for the possibility that we would get a true compression triangle in Elliott wave format, in which we would have a series of 5 legs, this being leg 1, 2, this being 3, and then my hope was that 4 would carry us up to the top. But as you can see, it at least at this point has stalled. Now, does that mean it's going to continue that way? No. If we get some kind of an announcement that's very bullish for the precious metals tomorrow, that market's going to take off and should at least run to the top of this resistance line. However, if we do not, my sentiment is that there's a high likelihood that the premium that's been factored into the market over this period of time, in which we have seen nice price rises, will be taken out of the market. That's just my belief. Now, traders, on to silver. There can be no doubt in my mind that over the last few days we have really witnessed there's some kind of play going on in silver. There's somebody that's been propelling and pushing this market higher. We had days where we had softer gains in gold than we did in silver. You can see how it really bounced off of this support level. But in terms of resistance, we marked out different areas. One of the areas is going to be based upon this particular top that we had, this top right in here, just in the mid-range of the 28s. And it seems as though the market attempted to make a new high, couldn't quite get to that point, and has now backed off. We're probably going to want to raise our stops. The stops that we want to raise are going to be just below the area of these tops. This should be supportive of silver. However, we'll have to see. The interesting thing, as I said, is there is absolutely something going on in the silver markets right now, and somebody is making a play for this precious white metal. We've talked about this triple bottom. I think the triple bottom is going to hold, but we are also at this point seeing a little bit of resistance in this area. In that silver will track with gold. If we get any kind of hard downside in the gold market tomorrow, we'll probably see silver follow suit, and we'll want to pull profits in that. Also, as I said, I will be sending out a special notification once this particular video goes live. I will announce it, and in that special email, I will raise stops and let you know where I think they should go. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.